Hi everybody, this afternoon on the marketplace, CD expected to gain some respite against the dollar this week after clawing back some losses last week amid U.S. recession fears. Meantime, oil prices decline as U.S. recession fears overtake Middle East conflict. But for how long, we will discuss. And it's been 8 years. The draft consumer protection bill is yet to be laid before Parliament. Despite promises by the government, we have reaction from Cats International. My name is Darryl Kwao. Thanks for being with us. Details coming up. Thanks for staying with us, everyone. The city is expected to gain some respite against the U.S. dollar this week following a weakening of the American greenback over fears of a possible recession in the U.S. The local currency clawed back some losses against major trading currencies on the back of moderating corporate demand pressures. Here's more in this report.
The Bank of Ghana auctioned $20 million to the bulk oil distributing companies at a forward rate of $15.56. Analysts believe this may have helped soften corporate demand. Consequently, the Ghana cedi gained 2.37% and 1.18% week-on-week versus the pound and the euro, while remaining stable at a mid-rate of $15.88 to the American greenback. Meanwhile, the government of Ghana intends to pay out coupons on the restructured domestic bond worth $6.1 billion this month. Analysts also believe this development could reignite cedi-funded foreign exchange demand as some foreign investors may seek to repatriate funds. This, coupled with the prevailing corporate demand pressure, may pose some depreciation risk on the cedi.
Well, not only is the cedi expected to claw back some of the losses against the dollar, the price of Brent crude has dipped on the international market. Joining me on Zoom is energy strategist, also Chief Executive of Eureka Energy Solutions, Dr. Yusuf Sulemana. Good afternoon to you. So how much of the decline we are seeing right now on the international market got to do with fears of a possible recession in the U.S.? And it's quite a surprising turn of events, isn't it?
Yeah, thank you very much, Darryl, and good afternoon to you and your cherished viewers and listeners in Ghana and across the globe. Indeed, it's a surprising turn of events, and that's not unusual for the market, especially a market of this nature, so fluid, so dynamic. And so what is happening, if you look at the U.S., in terms of oil market, they are a huge force to reckon with. Though one can argue that U.S. impact on the oil market is like a zero-sum game because they are the number one oil producer, they are equal the number one oil consumer. So one will say that their effect is not that much. But if there's any kind of discrepancies in the data being churned out in terms of how much U.S. consumed or how much U.S. oil is produced, that has a rippling effect on the market. Yeah. So yes, to some extent to the extent that if you notice oil market last week jumped like 4%, especially after the attack or the killing, and that premium has just vaporized so within few days. And one of the reasons, like you mentioned, is because of the recession fears. Over the few days, we had pockets of meltdowns, meltdown and recession fears will always impact demand. And so not probably the actual demand at this moment in time, but overall demand may be impacted. Yes. So that is what we have that is actually impacting the dip in the oil prices. And if you notice also, it impacted the dollar, like you rightly mentioned. And if it impacts the dollar, that all cumulatively, that will all have impact on the, on the oil prices. And the last thing also that has impacted the oil prices as we have it now is I suspect that U.S. shale has churned out a lot into the market in anticipation of, the attack retaliation from Iran. But the retaliation hadn't come the time that people wanted it. The premium is still there, but it didn't come immediately. And so also that has also caused the immediate dip that we have. But how sustainable it is, I think we need to watch the market because the market is still very fluid and dynamic, Darryl.
Yeah, does this douse the fears we had about the escalation of the Middle East conflict. I mean, we talked about it last week, and we're sort of anticipating the prices to go up if the escalation should continue. So does this U.S. recession in any way douse that fear that the potential conflict in the Middle East could have an impact on the prices of Brent crude on the international market?
Yeah, so one would say not completely, but it timid because if you notice what happened just after the attack, you remember oil prices went 81, and we all projected that a lot of analysts projected that there's a potential to go to the 3 digit, especially if the conflict is not contained. And as we speak now, there is only a delay in reply. Iran is still saying they will reply. I mean, sorry, a delay in retaliation. Iran is still saying they will retaliate. So should there be retaliation, definitely I can guarantee you that it will overcome the degree of what we have now, unless we have a full-blown recession. And what we have now is not a full-blown recession. It's some fears that's ripping into U.S. market because of some uncertainties and some discrepancies in data that have been channeled. But if those discrepancies or uncertainties are ironed out, as for the premium on the Middle East is still on the horizon, unless Iran clearly speak out that they are not going to retaliate. But until then, they are still saying that they will retaliate. But the magnitude, like I mentioned last week, the magnitude of the retaliation will determine how impactful the market is going to be. But for now, the reason why we have the sudden drop is because the retaliation hasn't happened. And they are still talking to each other. Those who have influences on Iran and Israel on the other side, they all are still talking. And so I believe, hopefully, even if there will be retaliation, the magnitude will not be to the extent of putting engaging the whole Middle East into war. But there can only be miscalculation, like I said, and that's what analysts fear. That if there's miscalculation, and then we have a full-blown war, oil prices will be seriously impacted.
I mean, the markets are rallying again after what we saw last week, and so this thing about the U.S. economy heading into a recession, that fear may just go away in a couple of weeks because the markets are rallying again. And so, I mean, for how long are we going to see this decline that we've just witnessed in the last couple of days?
Yeah, for the decline, I can say that it's temporary. This decline that we saw is just the jump that we had, the certain jump that we had because of the war premium, but the premium hasn't impacted the market exactly or directly or immediately, let me put it that way. But the premium is still on the horizon, And if you notice the market, it's inching up again. Actually, it dropped to below 75. As we speak now, it gets into 78 again, 77 to 78 again, without anything happening, without even Iran making the attack. So I would say that this particular slight delay that we are seeing, it may be temporary. I'm not anticipating the market assuming Iran hasn't retaliated and elongate. The market may just be around below 80, let's say 79 to 80. It won't go up. But to have the market dropping with OPEC holding onto the caps, it will take drastic, a very sentiment like probably a huge, meltdown within the U.S. economy to get the market down completely. But as I tell you now, what contributed for this market, I'll mention again also, was also the discrepancies of U.S. data that they channeled. It does happen that the monthly data wasn't matching the weekly data. The monthly data that was channeled by EIA, at the end of the day, weekly data channeled by API, there's complete discrepancy. The monthly one was showing inventory down, and the weekly one is showing inventory build up. So that discrepancy, the market is still trying to, understand it, and that's how come you see this drop. Once the market understands it, it will begin to, adjust to its normal position. And I think it's the pickup we are seeing is the market now reading the reality within the market scene and adjusting. So within a week or two, we will see the clear-cut picture what is going to happen.
Yeah, and I guess we can't enjoy it whilst it lasts because, I mean, the two determinants, when the prices go down globally and then the city is sort of performing well, we see that translate in the pricing locally. And so you think that maybe for the next couple of weeks, we should still anticipate that fuel prices will go down locally?
Definitely, what we anticipate is that there was a slight drop. I think I commend the marketers for staying put because I thought those marketers who had understood the international market they would have stayed put, but nonetheless, some of them reduced by 2%. That was highly commendable. And what we anticipate is that if the market stay put where it is, we will likely see same hold up or even slight reduction. But like I said, the market is fluid, but like you mentioned, right? Let's enjoy it once it is lasting. If there's any single drop, any appreciation in the CD, whatever that form, even if it is points, the marketers should try their best to cascade it to the consumer. Because at the end of the day, I always say this, Darren, people don't get it. Getting the pump prices down is not that we love the consumer. It's good for the entire economy. It lubricates the economy. Pump prices high, inflation high. It's good. It's not good for any economic variable. So it is the best interest of everybody, even the marketers. If the consumer is supposed to benefit, even if it is 0.01, they should do their best to cascade it to the consumer for the overall benefit of the entire economy.
Dr. Isi Sulemana, energy strategist, also chief executive, Eureka Energy Solutions. Thank you so much. We'll keep watching the numbers with you. Hopefully, we'll talk sometime soon. Thank you so much. Now, turning to some other news, the regional director of CATS West Africa, Pierre Kusiadimako, has called out the government for not fulfilling its promise of ensuring the Consumer Protection Bill is laid before Parliament. The bill seeks to empower, protect, and enhance the welfare and interests of the consumer to promote a fair, transparent, and efficient marketplace. Mr. Adimako joins us on Zoom to talk a bit more about this. Good afternoon to you. What's in the bill? Why is it so critical?
Good afternoon, and good afternoon to your viewers of Joy News worldwide and also in Ghana here. I think consumer protection is a basic law that seeks to protect the interests of consumers in the marketplace. Consumer protection law requires businesses to provide a bit of information to help consumers make a better decision. The law also provides a framework for consumer complaint, framework for resolving consumer complaints. Currently, because we do not have the law in Ghana here, what it means is that when you go and buy products from any shop, they have written on it that goods sold here are not returnable. And this has allowed Ghanaian importers to import inferior and substandard goods into the country. Because if a consumer doesn't have any right to return goods that he or she has purchased, then you can go and bring potentially substandard products. And this process of getting the Consumer Protection Bill started far back in 2006. That's when we got the first draft. And this draft bill has gathered dust at the Trade Ministry for many years. And in 2016, for example, the MPP captured it as a political manifesto that they will facilitate the passage of the Consumer Protection Law. But with almost 8 years down the line, the bill is still lying at the Ministry of Trade. There has not been any action on the bill. And with less than 4 months to go, we are very much concerned that the bill might not get passed. And if it's not passed now, and the new parliament comes or new agenda comes, for example, they may also not prioritize it. And it's very sad, and sorry to use the word sickening, that lots of bills are going to Parliament. And for me, I think let me blame the Ministry of Trade for not prioritizing this bill, because you see other ministries have taken a lot of complex bills to Parliament. Look at the Companies Act, for example. But this Ministry of Trade, for the last 8 years, they have only taken 2 bills to Parliament. That's the Ghana Standard Act and also Ghana Accreditation Service Act. And I think that it is high time the Ministry of Trade rise up from their slumber and take the document to Parliament. Because our check with Parliament and also the Parliamentary Select Committee on Trade and Industry and Tourism tells us that once the ministry submits the bill, they will help facilitate in passing the bill, getting the bill passed.
I read your article where you point out that it was one of the campaign promises of the MPP government. And so I'm just wondering why the hold up? Do you have any explanation to why it's taking them so long, close to 8 years, still there's nothing done?
I think in Ghana also, before bills are passed, there must be some form of agitation. Government must have interest in it, or some donors or some big politicians must have interest in it. Here, in the case of consumer protection law, the Ministry of Trade that is supposed to get it to Parliament has slept on the job for 8 years now, and there's no donor telling government. I mean, we've seen that the affirmative action bill was also, I'm told, if it is true, that the affirmative action bill, which was passed by last week, was part of the IMF conditionality. So, for example, if IMF had added this consumer protection bill as part of the conditionality to the loan that we got from them, I'm sure it would have passed by now. But Ghana, we have come of age that we don't need anybody to tell us what is good for us. Consumer protection bill, that will protect everybody, all the 33 million Ghanaians, including the president, the Speaker of Parliament, and the 275 MPs. And so if we are just waiting to allow somebody to move from London or Washington to tell us that, look, Ghana passed your consumer protection law, then I think that we are not serious as a country.
Well,
and Ghanaians have said it for many times.
Yeah, I was just going to point out that you started some sort of advocacy. How is that going? I mean, what responses are you receiving?
So we are going to petition His Excellency the President, asking him to facilitate the process of getting the bill passed into law. I think for now, the whole thing is held up at the Ministry of Trade. Once it leaves the Ministry of Trade and gets to Parliament, I'm very sure that it will get the needed attention.
Yeah, and talk to our audience about what the implications are if we don't get this bill before Parliament, get it passed soon enough.
So if we don't get this thing passed before this Parliament ends in January 7th, what it means is that businesses will not have any incentive to protect the welfare of consumers. Businesses will continue to supply substandard goods to you and I. Businesses will still continue to display goods sold here are not returnable. And businesses will not be seeking your interest. And so I think that it is very, very important that this bill as the executive make sure that this bill is passed before January 7th.
All right, thank you so much, Appeal Kuziad-Marco, Regional Director, CAS West Africa. Appreciate it. All the best. We'll keep tracking the progress you make with your cause for this to be laid before Parliament and hopefully pass sometime soon. I don't know if it works before the elections, but thank you so much. You're watching The Marketplace. Time to talk tech. Indeed, for Eyes of Africa, Henry Kobler is with us. Henry, I want us to talk about this because the tech world, we are digesting news about the ruling that Google sort of monopolizes the search engine. And it's something that's been going on for a while. It's pretty big. I want us to talk briefly about that before we move on to other things we need to cover this afternoon. Just explain to us what this issue was. Looks like you're muted.
Sorry. So almost everybody that is on the internet is almost every time on Google. I mean, it was a very significant word in the university when anything everybody says Google it. And so you basically would just jump onto Google and try and find it. Now, generally, Google has solidified itself in trying to be the most used search engines and basically has found a way to bring a lot of firms and stakeholders within the tech ecosystem to generally put their search engines as a default. I mean, if you're looking at what Apple rakes in almost about 20 billion as at 2022, generally, I mean, even Apple is making money off Google. And so basically we set up Google as its default search engine, even in its own Safari browser. And so generally it has just been that point where they're sort of monopolizing the whole ecosystem when it comes down to the search. And generally also because they sort of have the emailing system and other products coming together, especially with Android and Android phone infiltrations basically being the highest in terms of phone usages. Generally, you're having all the products of Google always sitting on this, and they sort of being able to have a lot of data gathering, and so it makes it quite easy for them to be able to be the default. I mean, generally, if you're looking at even their AI application, Gemini, which was thrown out there, you'd realize that away from ChatGPT, which is offline, Google decided that they're going to make their AI online, generally because they sort of have quite a lot of data they could always infer from. And the courts basically in the US are saying that the monopoly relatively is illegal. There should be other competitors that would come in. But as to how these competitors are going to break even and be able to break through this monopoly is going to be one of the things I would really watch to see which innovation could come close to it.
How does this affect me? Why should I really care about this?
I mean, it's not a cause to worry, especially when you have to jump onto the internet. I mean, Google has really been of immense help to quite a lot of people within the research industries, some in academia. I mean, generally to be able to get there and learn and to be able to just even do anything, even right from YouTube and all of that. I think that it's really not a cause to worry. It's only that most of the data that Google gathers really becomes the most powerful engine. Again, it translates into almost all their products that they sort of roll out. And so that gives them a way much power in terms of data gathering and data usage and data in their possession. And so that really gets to be a bit scary that one entity could definitely have all that in its power. But again, so far as we don't have an alternative that is really up to the task and more innovative, I think that you would always have people jumping on these platforms without recourse.
Yeah, other big news, Flutterwave, the payments technology company, is making inroads here in Ghana. It's actually been granted a payment service provider license by the Bank of Ghana. How significant is this development?
Daryl, I think that you've realized that Flutterwave really has been one of my very favorite companies.
Oh, yes, I remember.
So it's of no surprise that they've been able to get into the system and be able to checklist Bank of Ghana's enhanced license. I mean, generally, if you're looking at Flutterwave, that relatively had been able to raise 250 million in their Series D, relatively tripled their valuation in 12 months. And so valued at almost about 3 billion, you're looking at them being able to jump into the Ghana ecosystem and to make a lot of strides. I mean, we're looking at the projection of almost about 7 billion in terms of the digital payment systems as of 2024 ending, and we are actually anticipating a bit of a growth within almost about 15.78. And so generally we're looking at, even before we get to 2028, we'll be doing almost about 12 billion. And so Flutterwave, relatively with that huge valuation and capacity coming into the system, I mean, being able to do direct collections, payout sessions, automated invoicing. I mean, they have quite a lot of features on there, and being able to now also be in different countries. I'm looking at how interoperability is going to play out in being able to get to or send payments across borders right within Africa. It's one of the things I'm rooting for them to be able to do within their enhanced license. And again, also to be able to help some level of businesses and fintechs that are coming up with their licenses. I mean, the license enhanced helps them to be able to help some of these fintechs to come up and be able to provide support services for them as well. So I'm looking at how developers are going to jump onto this and be able to confidently develop quite more on there. It's going to be a huge competition, I mean, for a lot of the fintech companies right in Ghana, because the valuation of Flutterwave is quite huge. But I think that the fintechs again in Ghana are really do understand the ecosystem here, and they understand the mentality of the Ghanaian mindset. So probably would put in some level of innovation to make it go.
I guess the excitement with Flutterwave is because it's also an African success story. I want to talk finally about MTN because of news that it's reported significant 55% year-on-year growth on its data revenue. A couple of weeks ago on this show, we had to discuss concerns about high data pricing and how consumers were unhappy or dissatisfied with the monopoly MTN has. But like the figures point out, they're making real good profit despite the hue and cry about high data charges.
Yeah, Dario, I mean, I met the MTN project management team guys at the Project Management Institute, which was held in Rock City earlier last week. And if you look at their posture and how they've really pushing themselves into making sure that every project that MTN hits up really becomes a success, I'm not surprised by this record. I mean, in half a year where data, people would really be screaming about data, but yet we'll still be making almost about 55%. That is raking in almost about 4 billion Ghana cedis to their credit. And again, if you're looking at their year-on-year active data subscribers, which is rising almost about 15%, it wouldn't be really a surprise. But for me, I think that I'll blame the regulators within the industry for them for this. I mean, it's really not about MTN really pushing up to say we want to increase our prices to make more profit. It's more about being the significant market power and being on that level. Relatively, the regulators have some level of regulations coming in their way, where regulators will say decrease the number, the amount of data that you're putting on for a particular amount. And so if you're now buying data, say on MTN for a 10 gig, you relatively be receiving almost about 720 megabytes, whilst on the other networks, you rather be receiving a gig. And really that was a strategy to make sure that quite a lot of people can diversify and try and look at pricing to move on to the other networks. But that has never been so, again, because the infrastructure-wise and the quality of service and the quality of data that MTN quite provides, it might not necessarily be up the grid, I mean, as compared to other countries. But again, it's okay enough to beat down the competition for I mean, all the other telcos here. And so the strategy really being pushed in by the regulators, I think, really has been flawed and has not been able to achieve what it needs to really achieve. I don't think that is even not just about the data. I mean, MTN is declaring profit in mobile money and even with text. And so, yeah.
Let's save some data on this Zoom call, right? Thank you so much, Henry Kobler, the lead Eyes of Africa. There, let's check the headlines for you as we wrap up. PVC Limited workers demonstrated for unpaid salaries. That story developing. Also, BOG sanctions 47 individuals, 245 business entities for issuing bad checks. myjohnline.com/business. Thanks for watching. My name is Darryl Kwao.